Imagine this. You spent months, maybe years, crafting what you thought was the perfect trading strategy. You backtested it. Every historical chart bowed to your logic. Every curve, every candle, every trend whispered, "You've cracked it." You felt unstoppable. But the moment you went live, chaos ensued. Losses mounted. Your confidence was shattered. Your plan? Useless. Your edge? Vanished. And you're left wondering, why? Before we go deeper, I want to say that if you're watching this right now, please hit the like button, subscribe, and drop a comment letting me know where you're watching from. Trust me, this story is about to uncover truths that most traders never see, so stay with me. It starts with a simple truth. Backtesting is seductive. It's a place where the market obeys your rules, where every trade looks perfect in hindsight, where you feel like a genius. But the market is not history. The market is a living, breathing organism, unpredictable and merciless. Backtesting can only show you patterns. It cannot predict human emotions, liquidity, or the sudden shifts in global events that can vaporize your carefully laid plans. When most traders dive into backtesting, they're chasing comfort. There's a rush of dopamine every time the results are perfect. Equity curves rise, winning percentages improve, and risk metrics appear ideal. It feels like holding a magic wand. But that comfort is a trap, a psychological mirage. You see, the market doesn't care about your calculations. It doesn't recognize formulas or honor your past success. Live trading is a test of your mental fortitude, discipline, and ability to confront fear and uncertainty. I remember one trader I coached. He had built a strategy using 2 years of historical data. The backtest was flawless. He felt ready to conquer the market. The first live trade? A 2% drawdown, then 5%, then 10% in a single week. He was paralyzed. He started second-guessing, moving stops, and doubling down on positions he shouldn't have touched. The strategy that worked for months suddenly felt like it had betrayed him. What happened wasn't the strategy failing, it was him failing to adapt to reality. Here's the first reason most strategies crumble in real-world applications: overfitting. It's subtle, almost invisible when you're in the code, optimizing every variable to fit past data. You tweak and adjust parameters until the strategy appears perfect for the historical charts. But what you're really doing is creating a fantasy version of the market, one that never actually exists outside of history. Overfitting is the silent killer of traders' dreams. In backtesting, the strategy dances perfectly. In the real market, it stumbles over the unpredictable. Think of it this way. It's like memorizing a script for a play. Every line is perfect. Every pause calculated. But then, the audience laughs unexpectedly. The prop breaks, the lights flicker, and suddenly you're off script, unsure of what comes next. Most traders are trained to memorize past moves rather than perform in the unknown. The second reason strategies fail live is emotional deviation. Backtests don't judge you. They don't punish hesitation or greed. They don't make you sweat when your stop loss is hit or when a winning trade turns red in minutes. Live trading, however, is a psychological battlefield. The same trader who performed flawlessly on paper may choke under stress. He might take a smaller position out of fear, or enter late chasing a pattern, or exit prematurely, robbing the strategy of its edge. Your emotions can erase the statistical advantage of the best designed strategy in moments. Here's where the suspense truly kicks in. Most traders never realize that their own psychology is part of the market. You are not separate from it. Fear, greed, and overconfidence are forces that affect price action as surely as volume and momentum. When you go live, these forces collide with your backtested assumptions. That's why a strategy that worked flawlessly on historical data suddenly seems unreliable, messy, or even dangerous. Let me give you an example you'll feel. A trader I worked with had a moving average crossover system. On paper, it achieved 75% winning trades over a 2-year period. Live, he couldn't stick to it. He entered too early, exited too late, and compounded his losses. When we broke down the trades, it wasn't the strategy at fault, it was the fear of missing out, the pressure to perform, the urge to correct every small loss instantly. In backtesting, there's no FOMO. In live trading, FOMO is a relentless predator. Here's a key insight that most traders never hear. Strategies don't fail, traders fail them. The market is impartial, it doesn't conspire against you. What collapses your plan is a combination of overfitting, unrealistic expectations, and psychological blind spots. If you can't manage your mind, no amount of historical perfection will save you. And that is the cruel irony. Most traders spend more time tweaking charts than strengthening their mental resilience. Now imagine the frustration. You thought you were prepared. You thought every angle was covered. You backtested, you optimized, and you even paper traded for months. And yet, in the heat of live trading, the strategy that promised wealth becomes a ticking time bomb, eroding both your capital and confidence. That feeling, the one where every loss feels personal, where every reversal feels like the market is mocking you, that's the heart of the problem. And once you feel it, you realize something crucial. Your strategy didn't fail, your understanding of the live market did, and this is where curiosity must drive you forward. If you've ever wondered why your strategy that looked perfect in backtesting suddenly melts under pressure, stay with me. Because, in the next section, we're going to uncover the hidden forces that live markets throw at traders every single day, forces that historical data can never show you, forces that can either break your mind or elevate your trading forever. Before we move forward, don't forget to hit subscribe, like, and share this video. Also, please tell me in the comments where you're watching from. I want to know who's joining this journey, because what you're about to learn isn't just about strategy, it's about survival, mastery, and the psychology of winning when the market doesn't play by the rules. When you move from backtesting to live trading, the market suddenly becomes a living, breathing adversary. In your backtest, every order executes perfectly, every entry is on the candle you intended. Every exit hits precisely at the number your model predicted. But the live market is not a spreadsheet, it doesn't obey your assumptions. Orders slip, stops get hunted, liquidity vanishes in the blink of an eye. And the very structure of the market begins to test your mind, your discipline, and your courage. Most traders underestimate slippage. On paper, your strategy says, buy here, sell here, win 2R. In reality, by the time your order hits the exchange, the price has moved. Sometimes just a few ticks. Sometimes, it's enough to turn a winning trade into a loss. And when these small losses compound, your confidence erodes faster than your account balance. Slippage is not an error in the system, it's a brutal reminder that the market is alive, chaotic, and unforgiving. Liquidity is another silent killer. Backtesting assumes infinite liquidity, every order fills instantly at your chosen price. Live trading exposes the harsh truth. Liquidity is finite. The bigger your position, the more resistance you encounter. Large orders move the market, small markets run dry, and suddenly, your perfect strategy is choking, fighting against forces you never imagined. The live market isn't just charts, it's an ecosystem of buyers, sellers, algos, and institutions, all interacting in ways your backtest could never predict. Then there's volatility, the wild, unpredictable swings that seem to mock every carefully calculated risk. A strategy that performs flawlessly in calm historical periods can collapse when the market shifts into turbulence. Prices jump, stops are triggered, emotional alarms ring inside your mind, and the trader who once felt in control now feels like a spectator trapped in a storm. You begin to second-guess entries. You hesitate, you chase. And every hesitation costs you more than money, it costs clarity. And while these forces are happening externally, another war is raging internally. Your psychology is being hijacked. In backtesting, there's no heartbeat racing, no knot in the stomach, no mental breakdown when a trade goes against you 5 times in a row. Live trading, however, triggers the deepest parts of your mind, the parts wired for survival, not spreadsheets. Fear becomes louder than logic. Greed tempts when a position runs just slightly in your favor. And suddenly, the trader you thought you were disappears, replaced by someone who reacts impulsively, emotionally, desperately. Here's a truth most traders never admit. It's not the market that breaks them, it's themselves. The live environment doesn't forgive hesitation, indecision, or emotional interference. Every imperfection you carry, every fear, every urge to control, every lack of patience is magnified under real conditions. Your strategy didn't fail. Your preparation was incomplete. You thought numbers were enough, but numbers alone are powerless against the human mind. Consider latency. Even milliseconds can destroy a trade. Backtesting doesn't account for network delays, broker execution speeds, or server hiccups. live trading does. You might press buy, but by the time your order reaches the market, the price will have already moved. That difference, tiny in milliseconds, can turn a winning scenario into a losing one. And as you experience this repeatedly, the frustration mounts, slowly eroding your mental armor. Then there's the unexpected news, geopolitical shocks, and economic events. Historical data can never predict tomorrow's headlines. One tweet, one announcement, one unexpected policy shift can trigger a cascade of chaos. Traders who rely solely on backtested perfection are blindsided, scrambling, abandoning rules they thought were unbreakable. This is where emotional resilience becomes more valuable than technical skill. Backtests cannot prepare you for the shock of real-world randomness. Even more insidious is the illusion of control. Backtesting creates a false sense of security. The trader sees consistent wins, smooth equity curves, and rising confidence. The mind begins to believe it can predict, control, and manipulate the market. When reality strikes, that illusion shatters, often brutally. The losses feel personal, the trades feel unfair, and the only way forward is to rebuild not just a strategy, but the mental foundation to withstand uncertainty. Many traders respond to this shock with overcompensation, moving stops too early, increasing position sizes, or chasing after missed trades. Each reaction compounds the problem. The live market doesn't care about your emotions. It simply reacts to the forces of supply and demand, volume, and liquidity. Your attempts to fix the situation often accelerate losses, and yet, this is where the opportunity lies. Once you recognize that the market is alive, that slippage, liquidity, volatility, and news shocks are inevitable, and that your mind is part of the system, something changes. You stop blaming the strategy. You start asking deeper questions. Why did I hesitate? Why did I exit too early? Why did I chase? What patterns in my own behavior are sabotaging my edge? This is where traders begin to evolve. They learn that success isn't about a perfect strategy. It's about mastering yourself in the chaos, understanding that every loss is a lesson, every surprise is a test, and every fear is a signal of where they need to grow. Live trading exposes the weaknesses in both your plan and your psyche, but it also offers the rawest, most honest feedback imaginable. One trader I know experienced a month of relentless losses. Every trade hit slippage, volatility wiped out stops, and news shocks sent positions against him. He was ready to quit, but instead of giving in, he studied his reactions. He logged every hesitation, every emotional spike, every instinctive exit. By confronting the way he reacted to the market rather than just the market itself, he transformed his approach. Within weeks, the same strategy that had seemed doomed began producing consistent results, not because the market changed, but because he did. Here's the harsh reality. The difference between backtesting and live trading isn't numbers. It's discipline, psychology, and adaptability. You can create the most mathematically perfect system, but if your mind can't execute it under pressure, it's worthless. Every missed entry, every early exit, every emotional overreaction compounds into catastrophic drawdowns. And most traders never realize that the problem isn't their strategy, it's their inability to navigate the living, unpredictable, unforgiving ecosystem of the live market. So, if you're still watching, hit the like button, subscribe, and share this video. Also, comment with where you're watching from, because the next section will reveal a deeper layer why even disciplined traders with perfect execution fail in subtle ways most people never see. We're going to uncover the hidden psychological traps that lurk behind every chart, every signal, and every candle, and show you how to survive and even thrive in live trading when nothing goes according to plan. By now, if you've been following closely, you've begun to feel the raw tension of live trading, the chaos, the slippage, the missed entries, the fear and greed that gnaw at every decision. But here's the part that most traders never see. Even if you conquer liquidity, slippage, and volatility, even if your execution is flawless, the market can still break you not with numbers, but with your own mind. This is where the story takes a darker turn. Most traders assume that discipline alone can carry them. They believe that if they follow the rules, success is inevitable. But live trading exposes subtle weaknesses, invisible cracks in the psyche that backtests never detect. These are the psychological traps that silently devour confidence, edge, and account balance. And when you fall into them, it feels like the market is conspiring against you. But in truth, the only conspirator is your own mind. The first trap is what I call the confirmation addiction. It starts innocently. You look at a chart, a setup forms, and your strategy signals an entry. But before executing, you search for validation, another indicator, another candle, another source of reassurance. Each extra confirmation feels safe, rational, even intelligent. In reality, it's a subtle form of hesitation. By the time you act, the price has moved, the pattern has changed, and your opportunity is gone. Backtests don't punish confirmation addiction, they don't account for the emotional drag of waiting, doubting, and rationalizing. Live markets do. Every second you hesitate, the market punishes perfectionism. Next is the revenge impulse. Losses sting. They trigger an almost primal urge to retaliate. You missed a trade, you were stopped out, the market turned against you. The pain of loss isn't just financial, it's emotional. And suddenly, the next trade is no longer a calculated decision, it's an act of vengeance. You upsize your position, chase patterns, or abandon your rules entirely. Backtesting doesn't simulate emotional retaliation. Live trading does. And if you surrender to revenge, your edge evaporates in seconds, leaving behind nothing but regret and bigger losses. Then comes the illusion of knowledge. Many traders believe that understanding the market on a conceptual level equals competence. They read books, study indicators, and memorize strategies, but knowledge without application is a dangerous illusion. You think you know what's going to happen because it makes sense, but the market has no obligation to follow your logic. Live trading humbles every illusionist. The trades that seemed obvious, the patterns that looked predictable, suddenly behave like riddles with missing pieces. Backtests cannot punish arrogance, but live trading can crush it mercilessly. A subtle but deadly trap is overconfidence after wins. The human mind is drawn to patterns, repetition, and reward. A few consecutive wins make you feel invincible. Your pulse slows, your mind relaxes, your judgment sharpens, or so you think. This is when you start to deviate from rules, take positions earlier than you should, or ignore risk management. The market doesn't care about streaks. One sudden reversal can wipe out profits accumulated over weeks, sometimes months. And the harsh truth, overconfidence isn't visible in historical tests, but it's lethal in real time. Equally destructive is the fear of missing out. You've seen it countless times. A trade forms, you hesitate, the price moves without you, and an overwhelming urge to jump in takes over. Backtests don't trigger FOMO. Live trading does. And when you act under this compulsion, you enter at the wrong moment, size incorrectly, or ignore stop-loss discipline. You might get lucky once or twice, reinforcing the behavior, but over time, FOMO erodes profits, discipline, and mental clarity. Another psychological trap is the comparison curse. Traders obsess over what others are doing. They watch screens of experts, glance at social media charts, and wonder why their trade isn't moving like someone else's. This subtle form of envy or doubt erodes confidence. It doesn't matter if your strategy is solid, your focus shifts from your own execution to other people's results. Backtests can't simulate social pressure, live trading can, quietly and relentlessly. Here's the cruel irony. Most of these psychological pitfalls are entirely invisible until they strike. You can have the perfect strategy, execute with precision, manage risk, and still lose, not because the system is broken, but because your mind is quietly sabotaging it. Fear of loss, desire for validation, impulsive reactions, overconfidence, envy, all these forces operate beneath awareness, like currents in a river. If you resist them blindly, they will drag you under. Yet, within every one of these traps lies an opportunity. Awareness is the first step toward mastery. When you recognize the moments of hesitation, revenge impulses, or FOMO, you gain the power to pause, breathe, and act deliberately. Live trading becomes not just a test of skill, but a training ground for self-mastery. Traders who thrive are not those who avoid mistakes, they are those who learn to control their reactions when mistakes inevitably occur. I remember a trader who had mastered technical execution, but fell prey to every psychological trap imaginable. He was brilliant with charts, but impulsive with money. When we began logging not only trades but also every emotional reaction to them, patterns emerged. He realized that most losses weren't from strategy failure, they were from fear, hesitation, or revenge impulses. By consciously addressing these behaviors, pausing before reacting, limiting exposure after losses, and detaching from outcomes, he turned the same strategy that once failed him into a consistent, profitable system. This is the essence of trading. It's not about the charts. It's not about the historical backtest. It's about navigating the battlefield of your own mind while the market rages around you. Every trade is a mirror, reflecting your strengths and weaknesses, as well as your fears and desires. Ignore the reflection, and it will destroy you. Face it, and it becomes your greatest teacher. Now, let's be clear. Backtesting is not useless. It's a tool, a lens through which you can study probability and structure, but it's only a small part of the equation. Live trading introduces chaos, human behavior, and randomness that no spreadsheet can replicate. Your success depends on merging statistical advantage with mental resilience, the ability to execute with discipline in the face of emotional and environmental stress. So, if you're still with me, I want you to pause for a moment and reflect. How often do you let emotions guide your trades instead of rules? How often do you chase validation instead of acting decisively? How often do you let fear, FOMO, or overconfidence override your plan? These are the questions that separate the average trader from the consistently profitable one. Before we move to the next section, hit that subscribe button, like this video, and share it with fellow traders, and don't forget to comment below where you're watching from. Because in the next section, we're going even deeper. We'll uncover the hidden patterns in the live market itself, the subtle, almost invisible forces that can turn a winning strategy into a losing nightmare if you're unprepared. We'll explore exactly how to adapt, survive, and eventually thrive in an environment where backtested perfection means almost nothing. By now, you've seen the battlefield, the chaos of live markets, the slippage, the volatility, the sudden shocks, and you've walked through the psychological traps that silently destroy traders, even those armed with perfect backtests. But here's the crucial turning point. Acknowledging the problem is not enough. Surviving and thriving in live trading requires action. It requires a system for the mind, not just the charts. The first step is detachment from outcomes. This is something most traders struggle with. The moment a trade moves against you, your brain floods with fear. The moment it surges in your favor, greed takes over. Detachment doesn't mean apathy, it means seeing every trade as a single event in an ongoing sequence, rather than a personal judgment of your worth or ability. Backtests can't teach detachment, they don't punish attachment. Live trading does, mercilessly. Every time you let the outcome define your emotions, your execution suffers, and your edge erodes. To build detachment, you must start tracking your decisions, not just your results. Most traders obsess over profit and loss, equity curves, or individual wins and losses. The problem is that results are volatile, unpredictable, and often beyond your control. Decisions, however, are actionable, measurable, and repeatable. When you log why you entered, why you exited, and how closely you followed your rules, you begin to see patterns in your behavior. You discover where fear caused hesitation, where greed caused premature exits, and where impulsive judgment undermined your plan. This is where real growth begins. Next is managing position sizing and risk. It sounds simple, but in practice, it's one of the hardest things to implement consistently. Many traders overestimate their ability to withstand losses. They increase in size after wins, chase after missed opportunities, or double down after feeling wronged by the market. The live market exploits this instantly. Every trade is not a declaration of skill, it's a negotiation with randomness. When your exposure is proportional to your account and your mindset, you create a buffer against emotional hijacking. Small, consistent steps become your shield against panic. Another essential principle is pre-commitment to rules. Live trading is where human impulses collide with probability. You can know the setup in theory, but in the heat of the moment, fear and greed override logic. That's why you must write your rules down and commit to them unconditionally. Your entry criteria, stop placement, exit rules, and risk management must be non-negotiable. The moment you allow discretion to creep in, you are inviting chaos back into your life. Backtests cannot punish disobedience. Live markets do it ruthlessly. Now, let's talk about emotional calibration. Traders often believe that discipline alone is enough, but discipline without emotional awareness is like a sword without a hand to wield it. You need to know when your heart is racing, when tension tightens your chest, when your thoughts scatter in panic. These signals are not weaknesses, they are feedback mechanisms. They tell you when your strategy is being compromised by emotion. The best traders in the world don't ignore these signals, they respect them, pause, and act deliberately. Part of emotional calibration is building resilience through controlled exposure. Start small. Trade with minimal size until you can maintain discipline under pressure. Gradually scale as your confidence and emotional endurance grow. Backtesting doesn't teach endurance, it gives the illusion of readiness. Live trading is a test of both financial and psychological stamina. The moment you push too hard too fast, you risk burning out and abandoning the very strategy you spent months perfecting. Another layer is anticipating surprises rather than reacting to them. Most traders operate in reactive mode. They see a candle, they react, they see a trend, they chase, they see a spike, they panic. The difference between survival and failure lies in preparation for the unexpected. Know the maximum loss you are willing to tolerate. Know the conditions where your edge is most valid. Plan for contingencies in the event of sudden news events or liquidity gaps. When chaos comes, as it always will, you act from a place of preparedness, not panic. Equally important is mental rehearsal. This is a technique used by elite performers in sports, music, and yes, trading. Visualize scenarios where your trades go against you. Feel the tension, the frustration, the fear. Then practice executing your rules perfectly in those imagined moments. The mind does not distinguish well between imagined experience and real experience. By rehearsing emotional challenges, you train your mind to respond calmly in stressful situations, bridging the gap between theoretical knowledge and real-world execution. There's also the concept of micro-habits. Significant transformations occur through small, consistent behaviors. Logging trades, reviewing emotional responses, meditating before the session, following strict risk protocols. These may seem minor, but cumulatively, they form a mental armor. Backtests ignore behavior. Live markets test it every single moment. Micro-habits ensure that when the storm hits, you respond with precision instead of panic. A subtle but critical technique is using stops as allies, not enemies. Many traders see stops as restrictions, an impediment to freedom, a signal of weakness. In reality, stops are your protective partner. They define the boundary between controlled risk and uncontrolled chaos. The moment you tamper with stops out of fear or hope, you surrender your advantage. In backtests, stops are numbers on a spreadsheet. Live, they are lifelines. Respect them, and you maintain sanity under pressure. Ignore them, and the market will take everything you've built. Finally, embrace the philosophy of imperfection. No trader executes perfectly, and no strategy works flawlessly in every condition. Losses will come, mistakes will happen, FOMO will strike, greed will whisper. The difference between failure and mastery is not avoidance of these experiences, but how you respond to them. Each setback is a lesson. Each emotional spike is information. Each loss is data. If you can integrate these experiences without letting them control you, the live market becomes not a threat, but a teacher. This is the turning point, the moment where survival becomes possible. When you combine detachment, logging decisions, proper risk management, rule commitment, emotional calibration, micro-habits, and respect for randomness, you are no longer a victim of the live market. You are a participant, a strategist, a disciplined mind navigating chaos with awareness. The strategy itself becomes an extension of your preparation, not a crutch to hide behind. Take a moment to internalize this. Live trading will always be more brutal than backtesting. It will expose your weaknesses and amplify your fears. However, it will also provide you with the clearest and most honest feedback you can ever receive. And if you act on it consciously, it will transform not only your trading, but also your ability to face uncertainty in every area of life. Before we move into the final section, hit subscribe, like, and share, and drop a comment letting me know where you're watching from. The final part of this journey will reveal the ultimate mindset and actionable steps to turn failure into consistent profitability, even when the market seems to conspire against you. By now, you've walked through the battlefield, the chaos of live trading, the invisible psychological traps, and the brutal reality that even the most perfectly backtested strategy can fail if your mind is unprepared. But this final section is where transformation happens. This is where you take all the lessons, all the insight, and all the awareness, and turn failure into an engine for consistent success. The first truth you must embrace is simple: consistency beats perfection. Too many traders chase flawless execution, the mythical perfect trade, or the illusion of a guaranteed winning streak. Live trading guarantees nothing. Losses are inevitable, markets are unpredictable. However, consistency, consistent adherence to your plan, consistent risk management, and consistent discipline is something you can control. When you master consistency, your edge compounds. In declared, a single loss stops being catastrophic, and a single win stops feeling like luck. Your results begin to reflect process, not chance. Step 2 involves integrating all the psychological disciplines we've discussed: detachment, emotional calibration, anticipation of randomness, rehearsal, micro-habits, and respect for stops. They are not optional. They are the scaffolding upon which your strategy lives. A backtest is just data. Real-world trading is behavior. The edge you cultivate is behavioral, not numerical. When you internalize this, the market stops being an adversary and becomes a mirror, reflecting your growth and exposing your weaknesses in real time. Another crucial element is adaptive execution. The live market is fluid. Patterns evolve, liquidity shifts, news shocks emerge. Traders who cling rigidly to static rules without adaptation often fail. But adaptation is not chaos, it is structured flexibility. It means understanding the environment, assessing probabilities, and adjusting position size or timing without compromising your core rules. It's a dance between discipline and responsiveness. Backtesting cannot teach this nuance. It only exists in the live, unpredictable flow of trading. Equally important is embracing mistakes as data. Every loss, every impulsive trade, every misjudged setup is feedback, not failure. The trader who records these experiences, analyzes them, and applies the lessons immediately gains an advantage that backtests cannot replicate. Remember, live markets will always expose imperfections. The difference between winners and losers is how they respond. Winners adapt, learn, and improve. Losers blame, panic, and repeat the same errors. Mindset is your ultimate differentiator. You cannot separate psychology from execution. Fear, greed, impatience, and doubt are always present. They are part of the live trading ecosystem. The goal is not to eliminate them, they cannot be eliminated, but to control your reaction to them. When a trade goes against you, observe the emotion, detach from the result, and act according to your rules. When a trade wins, resist the temptation to overtrade or increase risk. Each moment becomes an opportunity to reinforce discipline and awareness. Here's a subtle truth most traders miss. Your edge in live trading is often more mental than mechanical. A strategy that loses for a week may still be profitable over the long term if executed correctly. The trader who panics, deviates from the rules, or abandons, stops instantly, destroys their edge. The trader who remains calm, objective, and disciplined maintains it. The market punishes behavior more than it punishes strategy. Master your mind, and the system works. Fail to master your mind, and the system fails regardless of its mathematical perfection. One powerful technique is the 24-hour reflection ritual. After each trading day, review not just your trades but your emotions, reactions, and decision-making. Ask yourself, where did fear influence me? Where did greed dominate? Where did I hesitate or overreact? Then, make a deliberate plan for improvement. This ritual transforms the market's randomness into a controlled learning environment. Backtests cannot simulate the emotional growth that comes from this disciplined self-review. Another critical practice is gradual scaling. Begin with a small size until your execution aligns consistently with your rules. Once you can trade flawlessly under small stakes, gradually increase exposure. Live trading is not about proving skill quickly, it's about building confidence and mental endurance under controlled risk. Rushing this process often leads to catastrophic emotional failure and account drawdowns. Patience, discipline, and deliberate scaling are the cornerstones of long-term success. We also need to address resilience under streaks of loss, because they are inevitable. The live market does not care about your confidence or history of wins. Losing streaks are tests of mental strength. The trader who survives is not the one who avoids losses, they are unavoidable, but the one who maintains rules, controls emotion, and adheres to risk parameters. Every loss becomes a lesson, not a trigger for revenge or panic. Over time, resilience compounds like capital. It grows silently but powerfully. Ultimately, adopt the mindset that live trading is a journey, not a performance. The market will never validate you. It will not reward perfection or punish imperfection, it simply is. Your mission is not to control it, but to navigate it, to turn strategies into habits, to turn awareness into resilience, to turn failures into data, and data into edge. The difference between those who succeed and those who fail is not in the system they are, in the discipline, mindset, and adaptability of the trader executing it. So, if you take anything away from this, let it be this: a back-tested strategy is only a blueprint. Live trading is construction. You cannot build without resilience, without emotional calibration, without discipline, without reflection, without patience. The strategy does not fail, the trader fails to master the strategy until it is achieved. And mastery is earned, not given. If you're still watching, I'd love it if you could subscribe, hit the like button, and share this video. Please let me know in the comments where you're watching from. Because now you know the truth. The reason your back-tested strategy failed wasn't in the code, it was in the chaos of the live market, the unpredictability of human emotion, and the silent psychological traps waiting to sabotage your edge. Take the lessons we've explored across this journey. Build your resilience. Respect randomness. Commit to discipline. Reflect daily. Adapt without abandoning rules. Embrace loss as data and make emotional mastery your greatest asset. Follow this path, and even a strategy that once failed, you can become a tool of consistent profitability. Remember, the market doesn't owe you results. You owe yourself mastery. And once you achieve it, the live market transforms from a nightmare into a teacher, from chaos into opportunity, and from failure into lasting success.